Professor Goswami sir. Professor Goswami sir.
Good morning.
Yes, sir.
Yes, good morning.
Yeah, good morning, sir. I am Bhartendu Singh from Department of Commerce. So, dear participants, we are having our next session from Professor Goswami from Dibrugarh University, Department of Commerce, and he will be talking about personal finance, financial issues. He's a senior professor in Dibrugarh University, Department of Commerce. His specialization is accounting, finance, capital market, microfinance, and all those kind of things. Experience of teaching more than 30 years. He has interesting research project on accounting and financial reporting practices of NGOs, a case study of some select NGOs in Bangladesh. He had been he has acted as editor of a journal published by his department named Vanid. He has guided more than 4 PhD scholars successfully awarded, and 6 are running as told for my now. And it's more than 20 papers in this field. So we are fortunate to have your time here, sir, and it is a very interesting topic, personal finance. Everyone is in their own. When we talk about commerce, management, economics, we talk about money, but we talk about money in the hand of government. We talk about money in the hands of corporate houses. We talk about money in business houses, but we don't talk about money in our hands. So Professor Goswami will be highlighting on those things. So now, sir, Goswami, sir, you may take your time and you may start with, sir.
Sir. Time I can take?
Yes, sir.
Am I audible properly?
Yes.
How much time I can take?
Sir, it is one.
Okay.
Yes. So.
Share. Yes. This day, the morning half. So good morning to all the participants, hosts. I see that you are giving me the opportunity to talk before galaxy of academics from economics, management, and commerce, all allied departments, allied sectors of academics. And since the option is given to me to topic on my this personal finance, and I try to attach with this personal finance taxation part, income, basically the direct tax we have. You see, yes, I shall share some slides on that. But actually, the thing is that what I want to say, actually, we all the thesis, we are basically from the same kind of job we are having. And in the society, we have about us a wrong notion is there that we are drawing a very fat salary. Everyone is saying so, but yes, fat salary, how far is fat or how far is fitted to our capacity or our nature of work, because we used to work 24 hours a day. Do you agree with me? I don't know, but yes, we have to work 24 hours. The people says that yes, taking 2 classes daily, much of salary we are drawing and so on and so. So this actually pains us, and yes, what I thought that is we have to defend ourselves. So that's why I bring of the weapon, some of the things how we can protect our income to some extent. Protect means actually we are not going to lose it, but yes, income tax is a big panic for us, and it is in inflation is somehow getting with all our effort, but it is very hard to manage all our necessities or all our requirements with the limited amount of finance we have. So what we have done in our department that yes, we have introduced a course on personal finance. Personally, I am dealing with that particular more than 1 year. With that. But of course, this course is not for the commerce students. This course is for other departments as a generic subjects we have introduced in our department, personal finance. So I want to highlight some of this area, and of course I want to make the attachment with personal finance, the taxation part. Let me share my slides here. Is my slide is visible?
Yeah, yes, sir, visible.
Should I make it slideshow, or it will do?
Slideshow will be better, sir. Otherwise, it is smaller.
Okay. Is it now okay?
Still not coming, sir. Yes, now it is coming, but not completely. Just wait, sir, 1 minute. So still a dark screen only.
But in my screen, I am looking to find
Full screen, no? But here it is only dark. I think, sir, you have to reshare.
okay.
It's the screen only, sir. I think
Is
so. You
nothing.
stop, restart.
Is it okay, sir?
Yeah, it is coming now, sir.
It is working, no?
Yeah. But full screens, I think some problem is there. Again, black screen only.
Next screen.
Then better without full screen, sir. Continue with.
The screen is making problem.
Yeah, some problem is coming. Yes. Yeah. So continue like this only. Still again black screen only, sir. So you continue without full screen, sir.
The screen, it will not be very much effective actually.
Yeah. Full screen actually is better. Then fonts are also bigger.
Is it now visible?
It is visible, sir. Yes.
But now it is not full screen.
Not full screen. Yes.
So I think full screen is getting problem.
Yeah, I think it is unable to maybe bandwidth.
Is it visible?
Yes, visible, very much visible.
So let me start with some of our financial planning, and that too considering the age. I don't know exactly the age of the participants. Might be they all are below 40 or so. Yes, I consider them all as young, and those who are crossing 55 plus or so, 55. Yes, let us take them as senior. So yes, the investment behavior of the senior or the financial planning for the seniors is a bit different from that of the juniors or the youngsters. So you see, when we reach a particular age, maybe 55 or 60 or so, what is going to happen that the regular income source gradually dried up, or it is going to end up at certain point of time, maybe after a few years or so. And similarly, the growth of the income. So far, the growth of income also gradually stopped, and we got a particular kind of saturation kind of thing. So far, the quantum of income, whatever we can generate out of our normal source of income, whether it is salary or anything else. And what happens during that period is that we started thinking, after my retirement or after my income dried up, what will happen to me? That kind of things are gradually coming to our mind. So that is, of course, quite natural. So that's why we started thinking on protective line, means how to protect my financial futures. Yes, no one knows that how long I can survive after my retirement, attaining a particular age, 60 or 65 or whatever. So since we are not sure about that how long we shall sustain, but yes, we have to have a long-term perspective in our mind. We started thinking for protection, and our sustainability means the financial sustainability on our part, how we can survive with our limited amount of action, whatever we could generate during the past years of my earning period, and how far I can sustain with that much of limited income, what I could get, because in future there may not be any inflow of income on my part, maybe regular, yes, some irregular kind of things, some casual kind of incomes may come to my hands, that is of course maybe different. For the insurance coverage part, the insurance company, after attaining a particular age, they started accepting insurance proposals from a senior person, because of their business policy. They started not to accept policy from the seniors. Of course, now I think which the seniors also can. And during that period, we started thinking about how can we have a bigger so that I can protect myself from inflation and protect my future period, expecting some long period of time. How long it will be, of course, maybe something different. Then coming to the age group, those who are below 45 or means which I'm going to mention them as youngsters or young earners. Yes, they start sense their age and commensurate with to earn income and so on. So they started earning a regular kind of income, and that too from various assured kind of sources, and to some extent, and yes, they have enough time, enough resource also challenges. Yes, if I am going to lose for some reason or other, I have time to make, because I have a long period of in lying behind me. So since I have a long period of income during which I can generate more and more incomes, I can take more challenge. Means I may go for making investment, risky investment in maybe in the capital market, or maybe in some other risky investment available, or maybe some risky investment are available in the market. So, and so far the insurance coverage part is concerned, yes, which is of course very much essential, and but for financial support and also for the dependents, because during that age group we get our kids, and of course for kids we have to spend for their education, for their health, for other kind of support. Of course, in our Indian situation, we have to make educate our kids, and at that particular age, maybe we have to spend some of money for our kids, and we all know that in present is very much expensive. It's going to be further and further expensive, because government withdrawing the financial to the public or educational institutions. I basically mean the higher education institutions. Is the government is gradually coming that they will mostly withdraw the things of the universities of various places and all. So if it happens, is education for the future kids, or the kids is will go on increasing. So to get protect for that means how can we give education our kids and so on and so forth. Plan for that. Of course, youngsters have to thought about the education and some other expenses which we are going to for our kids in the in coming years, maybe till they reach the age of 20 or maybe 20, 24 or so. Means till they got some kind of scope income on their own effort or on with their agency. So stars, yes, they can capitalize on the market opportunities. So here, yes, we all know during last 2-3 our capital market is going behaving in a very volatile way. It is very difficult to foresee what is that may happen tomorrow, because every day two time kind of things is happening. If today is there is a rise in the market capitalization, is tomorrow maybe sharp fall. It is behaving like that. Stars, yes, we have that capacity. If today the pricing, we may spare some of our funds to invest in the capital market in securities, because yes, we can take advantage of a senior person. That kind of risks he or she may not be able to take up, because you see his the comparatively shorter than the other youngster. Because youngster, yes, I may suffer continue losses maybe for 2 years, but yes, I have a long period of earning, so yes, I can bear it. That may not be possible for a person who is just going to attain the age of 60 or so, because after 60, maybe his regular earning will be dried up. So if it happens, and if that's why the youngster can take more risks, so their investment behavior obviously will be somewhat different from the seniors. So yes, and as a result, the juniors, they can invest more, the major portion of their in risky investment vehicles, whatever is available in the market, and have enough time to go on restructuring their portfolios. Because when we create portfolio, the one of the way of available to make the bigger and bigger, we have to because yes, I change my portfolio size, or I change the proportion the portfolio. I put different kind of securities as my investment vehicles. That is another thing. Then yes, so our investment plan, yes, we have lot many personal things, lot many situational things we have to take care of. So since I am trying deal with personal finance, so what are the personal factors to take care of for making our portfolio stronger and stronger? Of course, take care of the level of our income and how much I can spend for after meeting my regular requirements, after meeting my needs. Then another thing is the magnitude of income tax burden need to be very high at this moment, because only 2.5 lakhs we can get some relief, and above that, yes, we have to pay huge sum income as income tax burden. How much income tax I have to pay, and I have to spare for my investment after. Then another thing in personal finance is age factor. What age I belongs to. If I am 30, yes, my behavior will be different. If I am 60 or if I am 64, then obviously investment behavior, and accordingly we have to change our plan as such, so that it suited our, whether it is 30 years, 45 years, or years or so. Then another very vital thing is our personnel as well as the family obligations, which we have to take care of. We have to take care of our family. We have to give support to them. There is no other way to support our regular sources of income. We have to take care of all our family obligations. So far, the non part is concerned, apart from the normal contingencies may happen, yes, we have to have some contingency plan as well. Then from I am starting, whether I am starting from zero or I have some financing from my forefathers. If I have to make my own residential house, land which I could purchase out of my own saving, own income, my position will be somewhat different. Another person who got some land and property, his or her forefather. Of difference in the network position of these two, having network, having some assets from his or her forefathers, or the other person who is to create all his zero, starting from zero means out of his. Apart from that, yes, sir. Am I audible?
Yes, sir. Audible, sir. Audible.
If please intimate me,
Yeah,
because
yes.
I could not see except my slides here. I could not see anything.
Yeah, that is the problem in online mode, sir. But we can inform you, sir.
Okay, sir. Okay, thank
And
you.
our participants are not having access to audio, so they will be putting questions in the chat box. So that I will be putting.
Search box,
Continue, sir.
they will. Then yes, to access the search box. Yes, I have to take care of the search box. Slide position now, is it properly visible?
It is visible, but it is very small, sir. You can stretch it wider, sir. Full
Full screen is getting
some problem is
so.
there. Fully.
Is it okay now?
Yeah, this is okay, sir. Better.
Okay. So then another thing is that yes, financial literacy. We are all the participants. Yes, we have lost, but how far we are financial? One concept is enough, and one of my PhD on one which is there in my slide is mis-selling. So whether we are being sold or not by the financial service providers, we have to take care. Of course, it depends upon the literacy level. To make ourselves literate, so for the financial literate, whether an investment vehicle is acceptable for us, or whether a particular financial service we should go for or we should not go for, in many respect, it depends the age to which we belong. In case of insurance product, we have to be very careful in accepting an insurance product for our life coverage, because what market has revised, has come up in new. We are getting lot many newer and newer service providers, and newer insurance products are available. Now we can have a choice out of lot many insurance products available in the market according to our needs, because they try to customize the insurance product. So yes, we have to take care. We have to such tools and technique apply the present financial providers. Then one more thing, the risk bearing capacity. Yes, we all, if we always want to remain the kind of investment, investing in PPF, investing in PF, in NSC. Yes, we all know we can get maybe 5, 6, 7% we can get by investing in those vehicles. Yes, if I am not a risk, not going to take very high risks, investing in capital market, because capital market, my return may be zero, may be negative, maybe any extent, 100%, 100% or anything. So am I to the risk level, 100% risk, 100% risk, or I feel myself more comfortable with 5-6% return. So if it is so, yes, I have to compromise with NSC. And but yes, this another kind of investment available, yes, that may give some growth in the initial amount we are putting there. But we have to take care of how far that particular growth in the investment in NSC or PPF or kind of, is it capable to take the inflationary action, inflationary what is happening in the market? If it is not so, then how call that as investment? If the NSC or PP not give me protection against inflation, simply getting 5-7% return, how can I get protection for inflation? If it is so, yes, I have to take certain amount of risk, and taking risk, I can increase my return on my investment to some extent, maybe 10, 12, 15%. I can make to that level. Okay, if I can get 12, 15% returns on my investment, that can give me some protection from this inflationary compensation. So means, of course, these things happens to be, these things comes out of our risk bearing capacity. How we accept risk to what level? According to the risk bearing capacity, yes, one may grow his or her capital to a great extent, and one may not be able. Then another thing is that access to financial facilities available. Of course, now this part is almost over. Everyone is having equal access to the financial facilities, because earlier for making investment we have to do lot many offline activities, and those things will take a lot of time. But now, of course, these things are not necessary. We can have access to from a remotest corner of our country. Globally, we can have access to global financial system. So for access part, of course, it becomes a lot of easier kind of thing. We can have easily access to all the financial facilities available. Of course, barring a very few, in some cases, it may create some problems for accessing some kind of financial facilities, whatever is available. Then another vital thing is that, yes, so for the financial advisors, from the experts, yes, there is no harm on that. For such advisors, whether he or she is professional or he or she is belonging to particular financial institutions. So they are, yes, in our country, that maybe we can put a question mark. They behave with their present clients, active clients, because of their some kind of behavior, we suffer from mis-selling kind of situation. So that is, of course, that may happen. So we have to take care of the advisors' behavior with the customers, with the institutions to which they belong, and their market behavior too. So I have told you that, yes, mis-selling, we are becoming knowingly or maybe unknowingly. When we become victim, then only we may, I have been missold, so for this product I should not go for. But already I have gone for it. There is no way out. There is no way to come out already, which I have taken. So as required means, whether I am a victim of mis-selling or not, that I have to take care of at the very beginning, just making the decisions to take or not to take the particular investment vehicles or particular financial service. Lot many things we can go on. Personal finance is basically a behavioral finance. Lot many, because we are having a different kind of behavior. It is not as only we behave in this style or style, because into our situation to which and different situations whatever we have to content. So yes, make an exhaustive list of factors whatever These are some of the common factors which we all now and then, and maybe some of these things, of course, maybe obvious kind of things in many areas. But yes, one more thing included, that is the taxation. So far, of course, I mean here taxation, not the indirect tax part, the GST and part, the income tax, the burden, the taxpayers. Falls upon taxpayers, I have to spare 30% of my, even more than that, 31.2% of my income to the income tax authorities, because my income exceeds this 30%, because I fall in the 30% tax bracket. So 30% plus and surcharge on that, the ultimate comes to 1.2%. Earn extra 100 rupees, 31.2 goes to the income tax authority, and left out part to me for my consumption, for my use. So yes, I am to give thoughts on that. So income tax plays a very critical role in self planning, because yes, you see, in Income Tax Act, some incentive that yes, if I put some of our income in this and that way kind of vehicles, that may give me some comfort. So means income compel us directly or indirectly, let us to park some of our income, maybe with NSC, maybe PPF, or maybe with other provident fund kind of things. Making as a part of our tax burden, maybe, or maybe because of our employment. We have to have a SPF account, Statutory Provident Fund account, maybe RPF account, or maybe we must be a member of NPS, the new scheme, compulsion of our employment. This so is how for taking care of my tax burden. Looking at, I may go for parking some of mine in those kind of vehicles. So how we are dealing with the income tax part, wealth creation, because to get income tax relief in PPF or in PF, is it a wise decision? May not be. Yes, there are vehicles available in the market where some risk is, I have to take some kind of risk. Return may be on the higher side, maybe 10%, 15% return I can get if I park some of incomes, those vehicles, taking into account the income part as well as the wealth creation part. That may enable me to enrich my wealth further, the growth of my income in my wealth in the mood of PPF or in the mood of NSC and so. There is no doubt on that. We have to pay tax judiciously. It is our responsibility of the country, because we have to pay it, our country, our nation. We have to pay that. We cannot ignore it. But yes, how far judiciously we can pay income tax? Whether the income tax become a burden on us, or we are enjoying paying tax. Yes, we have to payment of tax on part. That is what very much means. Since the burden falls upon the payers and we have no other way out to come out of that, of course, for paying tax, we all know that directly we are not getting, but yes, we may get lot many things indirectly. But now what happens? Yes, out of taxable our tax liability, a major sum, I have not experienced that, I have not exactly studied that part, but a major sum or sunk of those our tax part creates benefit particular class, particular of the particular section of our country. those basically from the poorer section. Many benefits are being given to them. Where from these are giving? Lot many policies every day, and every day they are coming with. The government is coming with lot many. Yes, some money will be automatically. Then free LPG supply, free house, free cloth, free education, lot many things in free of cost. Where from these money are coming? Of course, it is the taxpayers' money. Our money goes for creating benefits of those people. And what happens ultimately is those people are gradually becoming lazier and lazier. They don't like to work because money will be credited to my bank account automatically. Food, I will get shelter free of cost. Why should I work? If it is so, it is everything coming free of cost for me. Yes, I may not be, I may incline, or if I want to, if capable enough to do 7 days work in it, but yes, I may work for only 1 day or maybe 2 days because just as a supportive, so that I can get some supportive income because already the basic is being fulfilled by somebody else. That does not ask for my personal. If it is so, then of course paying tax we cannot enjoy as that. Yes, I am paying tax is happening, but my tax part is going to somebody else. It is, of course, it creates another pain on the part of that. But yes, those things, if it is being common benefits, common assets, if the services are being improved out of our tax part and whatever we have, yes, the taxpayer understand, okay, my money has been utilized for this and that. From my money, this is being created, or out of our tax. Yes, these are the assets being created by the regulators. If it is so, it may be right. So that is what means we cannot avoid pay tax. We have to, yes, we have to make friendly. How friendly we can accept pardon tax as a matter of enjoyment. Let us enjoy tax and pay it religiously, and keeping into another point, another things in our mind that is that also equally creation of wealth, our personal wealth as well as the wealth of the nation. Because paying tax, we can create wealth for the nation. So it should create wealth not only for the nation, yes, it also creates some wealth on the tax payers, whether it's individual or other entities. So for personal finance part, how far tax is we have to take care of. I want to give some of my presentation giving trust on those areas. How far we can capital provisions given in the income. Most of the things may be known to you. Just as a reference things, just I want to mention some of those things as a part of my presentation. I think it will be. I think that it will be beneficial for you people earning, and yes, we can plan we can park our income in such a way that it creates benefit personal as well as it creates benefit for the nation or the society. So there is no other way out to go through the prescriptions, go through the regulations provided by income tax authorities. We have to go for and to pay tax. And more thing that if we claim any exemption or any kind of actions or any benefits as a tax, so the evidence behind that to take care of that part. Simply claiming one deduction or claiming one without any adequate evidence available in our hands, that may create problem in due course. it may not create mass problem, but later on in future course of in future case problems, so documentation or the evidence we have to gather of claiming those exemptions or those benefits whichever is given by the income tax act. And another thing is whether we are 100% dependent on the advisors or the consultant. Yes, we have to be careful. We have to use our own judgment in that. I am not having any doubts on the proficiency or expertise of the advisors. Respect to them. It's some is we should carry just following the advice, advisors or maybe one consultant, wherever our profession or our profession. But yes, we have to apply our own minds because yes, it is behavioral finance. How I behave depends upon is people. Yes, you park your money here and there. This much is the benefit. That much you may go up to this. But is it really going to happen? If it is subject to markets and advisors are claiming yes, your investment will be done. Is it possible? Yes, we have to apply our mind, our expertise, our financial literacy. Yes, within 2 years, yes, there is, it will not be a surprise. Yes, in some vehicles, and that too not assured, may be or may not be. So this may be or may not take care of. Because if it happens, okay. If it does not, and who will bear? Is it anybody available who will give me guarantee that yes, my return will be guarantee? Simply verbal guarantee. Yes, your money grow double over 2 years. That before you, and you are accepting you with this vehicle or that vehicle, and it is not happening actually in the real market. The consequence, who will face the gain? The music here. Obviously, being the investor will face the music, not the consultant. The consultant, okay, it was supposed to be, but it is not happening, so you have to face the consequence. So since being investor, we have to face the consequence, is we have to have on us not only faith on the advisors. Yes, we have to give faith on with the consultants, but we have to have faith on, is it justifiable to park money here in this vehicle, which may give us 100% benefit over 2 years or over 3 years, give guarantee. But yes, 3% guaranteed. That 3-4% guaranteed, because yes, in FD we are getting 5% or returns. It is guaranteed. They will give it 5% or maybe something. To get 5%, risk level maybe I cannot say 0, but risk level is minimum. But to get in the present context, in the present market, to get 10%, it is risk. Risk level, that is different. It may differ from investment, but there is risk because no one can give a 10% over a year, over a particular year. Yes, someone may give guarantee which growth 5% also. So my next slide will be on this directly tax part, where we can capitalize on reduce some of our tax burden. Section 80 is a very favorable for all of us because we all are having some kind of regular sources of income where we can in different sections because these sections give us some benefits out of our tax liability. putting some money or spending some money for this and that purpose, yes, we can get some benefit out of our tax liability. This means that my tax liability will come down if I spend something under a particular section for a particular purpose. If I park some of my income in some particular vehicles, then yes, I may get some out of that. Means some of these deductions, basically these are deal with deductions. Deductions means directly out of my subtracted. If my income is 5 lakhs, if I put 1 lakh rupees in NSC, then yes, out of will be deducted. Under a particular section, you are section 80C. So means parking some money in some specific investment vehicles or spending some money for some specific purpose, like accepting a medical insurance policy. And the medical insurance, they will take care of some of our which may happen or not. And because of that, to kind of assurance that yes, spend certain amount for myself or maybe family members, yes, I need not, because somebody else will take care of because of that level. Means I have to pay something. That policy is not having any maturity benefits, that is not in expenses basically, but that is we may get some financial support in due course. If it is not required, by the grace of God, if I am not suffering any kind of illness, then yes, I may not ask for any services from the medical. Then when pain, that is gone. Like me, other person may suffering from, yes, he may get the benefits out of this common fund, common pool of fund, medical insurance premium to a particular service provider. Some benefits are there out of some have income from this and that source in under this section. So here you see the section 80 gives us a lot of avenues to a great extent. I have done one calculation. That calculation is not with me. If your income is 7 lakhs plus, you can escape any kind of tax liability. If we can avail the what I am going to show in my, if we can avail those benefits, is out of 7 lakhs plus income, I need not pay a single paisa as tax. But of course, I have to 7 lakhs income for certain specific sum of my money I have to park in some specific investment, or I have to spend of benefits, personal benefits, my income of rupees. So let's see those slides. Only it is 80C. We all know that yes, we can pay insurance premium, we can pay unit-linked insurance premium, we may put something in PPF, mutual fund for, we, yes, under compulsion, we may be member of SPF, Statutory Provident Fund, or maybe recognized provident. Yes, we may go for C. Yes, mandatorily, we may go for NPS, or yes, for our kids, we may pay some education fees. We can put some of our post-office vehicles, some fixed deposits, specified, of course. We can park some of our income in some specified fixed deposit kind of investments, which are available with the bank. Putting the money here in this investment avenues, my tax liability. The thing is that way to put how much? How much I shall pay insurance premium? How much I shall pay in PPF? How much I shall deposit in NPS or maybe in SPF? Of course, it is our personal decision. Yes, one may go for 100% in. Is it justifiable? How far we have to take? You see, during my lifetime, I can earn income. During my lifetime, no financial support is required from outsiders. I don't have any support from the insurance company during my lifetime. Pension, it is different issue. Pension scheme, it is different issue. But for my coverage, who covers financial support? Of course, my dependent family members in my absence. Of taking a traditional endowment policy, taking a common life policy, paying insurance premium for a long period, 20 years, 25 years, 30 years, and at the end of 30 years or 25 years, what I shall get my money back, not if I consider a discount rate, 10,000 rupees premium for 30 years. So 10,000 into 30, so 30 pay over 30 years of my service period. And at the end of the day, after my service period, how much is the policyholder I survive? How much I shall get back? 6 lakhs or maybe 5 lakhs something. See the present worth of that. 1,000 rupees for 30 years, its present value, and 5 lakhs or 6 lakhs end of 30 years, its present value. Both will be more or less same. So what is the use of that product? If available in the market, taking the same kind of risk during months. Because for this 30 years, I am surviving and getting some survival benefit, 6 lakhs or so. So what of that if I compare, then you will find that both these two at par. Investment, no investment, if I am getting back my money after 30 years, so what is the use of putting money in that particular vehicle? Is it human kind of things or psychological kind of factors? Yes, taking my real risk. If I died during my policy support, if I pay premium for 1 year or 2 years and expired, then yes, get financial support. But to the financial security, there are another kinds of policies which are available in the market. Term insurance. So yes, we can go for term insurance policy instead of accepting those traditional endowment or whole life kind of things, because these are just capitalizing the psychology of the police present as a prospective policyholders, and we hardly know that. Yes, I have joined newly in a job. Yes, the other day insurance agent comes to my house, and yes, I accept one. I sign in the we agreed to pay certain amount of insurance maybe for next 20 years or so. That is the tradition used to do. But yes, now yes, we have to take care of. It's not that yes, I should not go for insurance policy. Yes, what is required? Yes, I may go for term insurance policy instead of going for traditional kind of policies, traditional insurance policies. This maximum amount of 1.5 lakhs, a total amount of 50,000 scope is there, which can be parked in NPS, additional 50,000. Then yes, deduction is can be enjoyed. Here, maximum deduction is ATC and ATCCD together, it comes to 2 lakhs. So out of the tax will be subtracted. So it reduces 2 lakhs of my income directly. Out of lakhs, yes, you subtract 2 lakhs here. What is left out? 5 lakhs. Let's experiment further how far I can deduct out of my income for calculating my tax liability. This is news. Medical insurance premium. Individual can have this insurance. This is general insurance policy. Whatever premium we pay, it is deductible from. Return is, of course, if required, if situation demands, then they will take care of medical expenses. And here I can pay how much? 25 for people BS of pay, means up to 25,000 I can pay medical insurance premium to subtract from my income. And if somebody is there in my family who is crossing the age of 50 or 60, then yes, I can get something additional deduction out of my taxable income, that is another 50,000. Means maximum premium 75,000. But of course, this 75,000 will be the subtraction income, but it will be basically an expense. So now, out of left out income 5 lakhs, another 75 I can pay. But of course, that will use my purchasing power. It is not that I have to pay 70,000. I can pay any amount in between. I can pay for my life, dependent family members, life insurance means this many claim insurance paying 10,000, 20,000 or so. It depends upon my capacity, my age. Because when age grows, then the possibility of ailment, the scope of ailment or the magnitude of ailment may increase. So we can go on gradually increasing the quantum of medical insurance premium depending upon our age factor. It's another 75 max. We can get a deduction out of my income. So that is another lakhs. How much is left out? 4.25. Then another thing is there here. This is of course relating to a person having some level of disability in the family, who is of course happens to be dependent upon the taxpayer. So if that kind of family members are there in their family, of course it is not expected. Yes, incidentally that may happen. We because of bad luck or because of something happens, these things may be there. But yes, there is another opportunity to get some relief, to get some deduction out of taxable income, maximum 1 and or maybe the actual expenses incurred for of this kind of special or level of disability, yes, or maybe the actual expenses incurred for a person, or contributing certain money to some specific institutions who are working basically for the benefit of this kind of special person. Another 75 or maybe 1.25 lakh reduction, we can get our taxable income out of this 4,25,000. So that way, if maximum amount 1.25 means left is only 3 lakhs is left out in my hands. Of course, to this 3 lakhs, it is not that yes, I am having 3 lakhs at this moment, that is regular income. Out of my regular income 3 lakhs in my hand, but yes, but how much I paid for as expenses? 2 lakhs I invest in then something in 80D and something in 80D and 80DD is my expenses. Around 2 lakhs I have spent out of GTI, out of my gross total income. Then another kind of relief we can have, that is a special kind of medical treatment for some specific diseases. Is we should not expect this kind of things, but if it happens, it may happen to anybody of us. If it happens, then yes, we can get another 40,000, another 40 plus, depending upon the if the category means crossing the age bar of 60, then 1 lakh we can get additional amount of deduction. So that way another 1.4 lakhs we can deduction depending upon the expert for some specific kind of diseases if it happens to somebody. If it happens to somebody, we cannot say they suffer from this kind of ailment. It may come to any because of bad luck may happen. So yes, we can take care of. We can keep these things also in our mind. If this happens, yes, we can have some kind of relief, some kind of deduct of my taxable liability. That is another thing. Then 80 years have to incur some expense, children? If so, then yes, already I have told you that yes, higher education is becoming clear and costlier day by day. We all know. So yes, there is scope to take loan for education, imparting higher education, or maybe imparting higher education to. So yes, if we go for higher education loan and we pay interest, yes, interest part we can get some reduction. There is no limit as such. So far the interest part is concerned, but repayment of loan, of course, is the interest, it is deductible out of my taxable income. So that yes, if taking education loan, I can avail relief, certain amount of relief, paying interest on such higher education loan taken for. But of course, the loan should be for means after 10 plus 2 standard plus 2. If my children are imparting some costlier institutions, yes, and I for loan, yes, I can get some deduction out of my taxable income on the part of uh, the interest whatever I pay to the financiaries. That is another area. Then yes, interest on loan, interest on that too for property. You might know that yes, we can avail a deduction out of our let out property income or maybe self-acquired property income in a particular section 24B. But apart from that, subject to condition, another 50,000 deduction can be under section 80EE. This is additional. It means that total out of this house property may go to 2.5 lakhs under 80EE and in under section 20B. So 4B is available for let out property as well as for self-occupied property. But here to get additional 50,000 are applicable. So one is house, the cost of the house should not exceed 50 lakhs. Loan sanction should not exceed 35 lakhs, and sanction period 16-17. But loan during this period, they can, for them, this is a special benefits available for them. They can avail this benefits. But for them, again, there may be a limit of this 2 lakhs, 2 lakhs deduction out of 2 lakhs deduction under section 24B. Some limitation may arise in this 2 lakhs figure for them, those who are availing section 80EE. But there is no budget availing deduction under 80EE and 24. There is no specific restrictions. I am availing deduction under 80EE. Even then, I can avail deduction under 24B. There is no restriction. So these two things we can take care to get some again tax relief out of our income. Yes, another deduction is interest payable on loan residential house. This is similar to that of the earlier one, but here the difference is the loan sanction period. Yes, this is of course latest, means from April to March 22. If during this period loan is sanctioned, then yes, and cost of the 5 lakhs or lower, then another amount of 1.5 lakh is deductible, and apart from that another 2 lakhs, means total 0.5 lakhs we can get deduction for what? Interest burden on such kind of housing loan. So 3.5 lakhs, but if 3 lakhs on a loan of 30 lakhs or 5 lakhs, it may be too high, but that much of interest will not come on total whatever we are going to take. But even then, what is to pay, whether it is 50,000 or 1.5 lakhs, whatever, is we can claim deduction on that. Of course, figured out the cost of the project is is limit if one goes for a loan of 40 lakhs. Interest burden may not come to the level of 3.5 lakhs annually. It may not be so, maybe total it may come. If it is so, then yes, entire amount of interest burden can be claimed as deduction by such person. This is another advantage which we can as a part of our personal finance. Then yes, this is coming another new thing, and still the is there, and the market know that electric vehicles are coming up in the market. Some of you might have this kind of vehicles. Yes, two as vehicles is government giving emphasis on this carbon free country. India is trying to go for carbon free, so that's why giving a lot of incentive to those electric vehicle owners. Yes, to own electric vehicles, as you all know that electric vehicles are a bit comparatively costlier than this petrol or diesel version of vehicles. So yes, this still incentive is there. Want to have electric vehicles, which is compared, yes, we may need some financial support. Here, a vehicle of specific features, electric vehicles or so. Yes, we can get another tax relief. Another deduct of the my taxable income is 1.5 lakhs. So if I have electric costings, yes, my interest burden level 1.5 lakhs or so. Yes, our taxable income, this much again I can subtract. So that way my tax since I have started with 7 lakhs is gradually going to be negative. The thing is that of course it cannot be negative, but there is a limit, because at the very value that yes, so for the limit sections, 80 different sections, there is a limit. It cannot exceed the GTI is income, but still there is scope. It is not that we all are having, or we can avail all these facilities. Housing loan, car loan, education loan, everything may not be viable, because we all are having a limited source of income. There are alternatives. Yes, if someone may go for electric vehicle, someone may go for housing loan, some may go for education loan, according to our need or requirements, our age to, because age-wise the requirements may be different. To pursue education up to 10 plus 2 means 10 plus 2 means the guardian age will be maybe around 40 or so. So till that, yes, education loan may not be required, or even if we take loan, there will be no benefits for interest under this section. So means after 40, the children started taking education, and yes, then loan. Before that, at the age of 30 or maybe 35, education loan requirement may not be required. But of course, for it may not be. So means age-wise, and go for, if I'm not in need of education for this vehicle loan, options are there. I can go for electric vehicle loan, or depending upon my needs to which. So this is another area which we can take care of. And ETC, of course, this is donation. We can make donation for funds like National Defense Fund, PM relief. We donate certain amount to this fund. Yes, up to the 100% of our deduction, we can get relief. We can get deduction directly. In some cases, of some donation, of the donated amount, 50% of amount donated, we may get some deductions out of that. But the thing is that deduction or amount or donation to be made to this funds, whatever it is made, not in cash form, in other forms. Other forms means maybe other bank mode and any kind of electronic kind of move we can make the payment. Or is that if our payment exceeds 2 lakhs, 2,000, then yes, we have to opt this. Even below 2 lakhs, yes, we can pay in and we can get relief, we can get return out of our taxable income. That is another area. Then, of course, we all are house rent allowance. This is not applicable in our case, but yes, those who are not entitled to HRA, for them one relief is there, that is up to rupees 5,000 maximum is deductible out of the taxable income of the SSC. They are not entitled to house rent allowance from their employer, because it may happen to some private concerns who are not entitled to HRA house rent allowance, subject to other conditions of the rent they in a rented house, for which rent paid salary, and the SSC should not have, the person should not have his own house, that location where he is pursuing their job. So another 60,000 maximum we can claim as. Then yes, up to 5 lakhs, up to there is no ability, 100% tax relief we can avail. Am I audible?
Yes, sir. Yes, sir. Audible, sir.
Yes, sir.
So this is another thing. Then apart from that, one common deduction is DTA and ATTT. ATTA is for the young group. ATTB for senior, means those who cross the bar 60 years as per the income tax. Is ATTTA interest on savings account. Interest on savings account 1,000 is deductible. If we cross that, then yes, the excess part will, and now the income tax authority has access to all our bank accounts we have. So it is the aggregate. I may have bank account in 3, 4, 5 banks, but in all banks I have my savings account, and my interest part is lower than 10,000 in all the banks. I cannot claim, since my income is 10,000, income on savings is less than 10,000, I am claiming exemption, I am claiming deduction from all the banks' income. It is not so. It is to be aggregated. If the aggregate income is 30,000, then yes, 10,000 I can get deducted. Other 20,000 I have to pay the tax on that. And for senior citizen, this 10,000 is replaced by 50,000. So 50,000 in aggregate can claim by a senior citizen as deduction under the specific sections. So taking it together, is there are a lot of tax incentive we can have. Apart from that, there is one more tax rebate under section 87A. If my income is 5 lakhs, then 100% tax relief I can take, 100% rebate I can take, but of course subject to a limit of 12,500. So maximum rebate I can have under this section as tax rebate. This is not deduction, this is rebate. Means up to 5 lakhs of income, if I fulfill, if I do this and that, as we have discussed in earlier slides, yes, my tax liability will automatically come to 0. And if my income cross 5 lakhs, then yes, some tax liability will come automatically. Of course, if I can avail certain deductions, then it may not. But if my income is below 5 lakhs, then I need not worry. There will be no tax burden. There will be no tax burden, because on 5 lakhs, my tax liability, maximum tax liability will come to 12,500. So that much of rebate I can avail under this section. So this way, I come to the end of my presentation. So yes, we have to save our income tax liability. We have to pay tax for us as well as for the future generations. We have to be very much ethical in claiming any deduction, whatever it is. whatever any sections, whatever the purpose or whatever the conditions we fulfill, those things have to be documented. And one, my advice to all my colleagues that don't always depend 100% on your advisors. You apply your own minds, your own intelligence to make your investment in true sense wealth. Because it is easy to make investment, easy to park our money, our hard-earned money. Because yes, it needs lot of effort. Whatever income I am getting, yes, I have to give effort on that. So yes, since it is hard-earned money, and out of that somebody is taking 31.2%, of course it will pinch me. But the thing is that if somebody asks me to park my money here, then I can get some kind of tax relief, and it is not actually work as it is being proposed, as it is being placed before me. If it does not work so, then yes, I will be in trouble. I have to lose my money, as well as I have to lose my everything also. So with this, I conclude, and of course, this is the last slide. Thank you everyone for having patience hearing. And yes, if I have any observation, any question, please you can ask for. And if any clarification, if you need, yes, you can.
Thank you, sir, for a very excellent and very important topic. When we talk about tax planning, we think only about Section 80C. And we know in our system, because PPF or NPS or GPF deduction is there, that 80C section is already exhausted. So actually, we are not getting anything. But you have introduced us many other schemes, almost all deductions which are available to common man like you and me, that you have introduced to us, and that is really appreciable, sir. Income tax is a very tough but very interesting subject. So thanks for all those things what you have discussed, and a lot of appreciation is there in the chat box. If you see, some small questions are there. I request participants, if they have any question, they can put it now also. One question is there from Dr. Sanjay Sinha, that he wants to know whether NPS fund is taxable after superannuation.
No, sir, it is not taxable. After superannuation, not taxable.
Yes, it is. Yeah, so it is not taxable. Actually, as per Act, 60% is exempted and 40% is going to be compounded, so no tax practically. But yes, pension which will be paid out of this will be taxable. So thank you, sir, for the clarification. And one more question from Sanjay Sinha is there, that the return from LIC is taxable after maturity or not?
Actually, it depends. It depends upon the type of policy you are opting for. Some policies are it is exempted, but in case of some policy it is taxable. So that is to be checked again, which one is taxable and which one is not.
Yeah, yeah. So a simple rule is there: 10%. Your premium should be less than 10% of the sum issued. Then only the deduction we can claim under Section 10D. So thank you, sir, for clarifying these questions. We don't have any other question from the participants, but all are praising your presentation, sir. Few of them are asking for the PPT. If you share, we can share with the participants. That will be helpful to them.
Yes, perhaps it will be with you, or I have to mail it.
You can send it to me, maybe to our email or WhatsApp. Anyway, you can share, and we can share with the participants.
Okay, sir, I can share this. No issue.
Okay. Okay, either with me or Professor Jyoti Kumar, anyone you can share. We can circulate among them.
I have Kumar's mail ID, but I don't have.
Okay.
Okay, I can send it to him also. No issue.
Okay, okay. So same thing, sir. Whether he or I receive same thing. Okay, sir. Now time is also about to be over. Any participants, if any question is there, please come up. Sir has suggested us to not rely on solely on some experts in tax fields. We all should know the basics of tax filing. ITR filing, we should try to do ourselves. We may take help of others, but don't completely rely on them. See from your side. And this is the right platform to ask if you want to ask anything from Professor Goswami. So further, no questions, sir. So thanks for giving your time and elaborating, enlightening us for a very tough, very complicated, but very interesting subject on taxation and financial planning, personal finance. Thank you, sir, for sparing your time, and thanks a lot for joining us. Thank you, sir. Namaskar, sir.
Thank you very much. You are saying
Yes,
you are
sir. Yes,
able.
sir. Yes, sir.
Participants are basically faculty members, no? From
Oh, yeah. All are faculty members. All are teachers from either commerce or management or economic subject from different states of India.
But had we been in offline mode, it would have been something different because looking at the face of the participants, then
Yes. That is the problem in online mode, sir. The motivation is missing. Unless we see the faces, unless we get some questions in between, it's not that encouraging. That's true, sir. It's little monotonous. While speaking, it is monotonous. One-way communication.
yes, I am just
Yeah.
speaking my machine only.
Yes. And seeing your own face.
Yes. So that is the most critical thing actually. Being
Yeah,
this,
yes.
we enjoy talking before the students or the audience.
Yes. That's true. Very true, sir.
Before machine is not enjoyable at all.
Yes. Now, sometimes we feel whether the listener is there or not.
Yeah, but these things becomes normal now.
Yes.
At point of time, these were not even we thought of. But now,
Yes. 2 years back, it was not ever in mind that it is possible to interact like this.
yes. Everything is revolutionized.
Yes.
Great revolution we have experienced. So we are lucky enough to have this kind of platform as well as that platform. So we experience both actually.
Yes. And that is one way of blessing, sir. Earlier, when we used to conduct refresher courses, we were allowed to ask only two experts from outside our university, only two. Rest all within university we have to manage. Now we are conducting this and we are asking very few from our university and we are taking experts only from outside university. Only 5, 6 are there from within university. So that flexibility we got. So experts from different fields and different subjects from different universities, we can collaborate. So that is a blessing we can say, sir. But yes, one-way communication, that problem is there.
That maybe in due course that will also be sorted out. That may be
Yes.
out.
Yes,
Now it
certainly.
is, but later on it may be. Okay then. Thank you, sir.
Okay, thank you, sir. Thanks for joining.
So I leave the meeting now.
Yes, sir. So, dear participants, this was our first two sessions this morning. Now we'll be having two more sessions in afternoon. The third session, Professor C. Mohan, Professor Chandra Mohan from Central University of Tamil Nadu will be taking, and he will be talking about innovative teaching learning practices. And the fourth session will be from Professor S.S. Mahapatra, who is Dean in University of Sikkim University, and he will be talking about general purpose financial statements. So these two sessions will be having in afternoon. Let's go for a break, a small break of half an hour, and we'll reassemble at 1:30. So we'll have a session at 1:30 to 3. And our fourth session, the expert is actually out for a certain visit, some inspection visit. So he told he may start little late. So I will update you before the end of the third session when to start the fourth session. Till then, let's take a small break, half an hour break, and try to join 5 minutes before 1:30 to start the third session. Thank you. Thanks and all. See you all at 1:30.